Good afternoon and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for October 26, 2008. AccendoTraders.com, effective trade plans delivered daily. Each time we get to come together, we try to prepare ourselves for the next trading day. On a weekend, we also want to make sure we see what's coming down the pipe for the upcoming week. Economic news, earning news. We want to read some of our newsletter and blogs that are out there to see what the experts are saying about the market. Check the sector for trends so that we can start to scan for new trades and see if we need to be in any certain sectors and set some new alerts. But most importantly, we want to make sure that we have time to spend with our families. Certainly was yet another interesting week. The market ended down. All three major indexes ended down for the week. But the real story was the global recession concerns. The LIBOR rates continued to go down for the week on all terms. The 30-year bond rate hit the lowest level since 1977. Oil plunged 11%. All of these factors contributed to the dollar surging 5% against the other currencies. The foreign markets unraveled on Friday. We'll talk about that in a second. Increasing number of companies are decreasing their size of their workforce, and most of the third quarter earnings are being very cautious about their fourth quarter earnings. And we still have the concerns about the hedge funds and the forced selling that they are going through. And as we're saying, even when companies like Apple and Amazon have good third quarter earnings, they're being dismissed because traders are focusing on what's going to happen on the fourth quarter and whether or not they're going to be good at all. And then, these companies are giving very wide forecasts. Apple gave a range of like $1 to $1.40. Amazon gave a huge range for earnings, like 300 to 400 million. Then Bernanke came to the House and testified that the economy is going to be weak for several quarters. Greenspan also gave a testimony this week saying that more job layoffs are inevitable. He also talked about that Freddie and Fannie were not the cause of the problem, although they could be a contributing factor. And he said he might have been wrong. I actually think he said he was wrong about his philosophy about the whole free market and regulations working them out themselves. And on Friday, we had what was called a future lockdown limit. And it's the first time I ever seen this. And this is, again, the foreign markets were down big. And what they do is at the beginning of every quarter, they put a limit. And on Friday, the futures had hit the 5% threshold, which prevented them from trading any lower until the stock market had opened. And, the market did continue down to about 6% down, and then the buyers came back in. So that October low is still holding up as somewhat of a support level. If we break through that October low, we need to look out below. So this week, we've got new home sales on Monday, consumer confidence on Tuesday. We do have the FOMC policy statement. It's that time again. Initial claims and GDP on Thursday. Some more on Friday. I know on Friday there was talk on CNBC of whether or not there was going to be another rate cut. I think the futures were predicting a 75% chance of a rate cut. We'll see. We shall see. That's the biggie of the week. Again, I don't think. We were in the past. We were always talking about what catalyst is going to move us. I don't know if there's going to be any catalyst that's going to move the market up besides time and confidence. And right now, the traders don't have confidence in the government solving it. So I don't know. Maybe we have to solve it for ourselves. So coming up tomorrow, we got new home sales. We do have some earnings, and you can see here we have coming up for the week earnings. And we're still not watching any real splits plays. So let's go on and take a look at the sectors. Okay, so back here about 2 weeks ago, we talked about the morning star pattern, about the market coming down, gapping down, and needing to go up. When we look at the market, we're seeing that same type of pattern here. See gap down, going up. So we have a gap down this week also. Let's go over we gap down, went up the next day. Gap down. That is a morning star pattern. And in order for the October lows to hold, that's what we need. We need this gap down and rally. We need another day to rally up. So our best case scenario is for us to see, now you can see gold has been crushed, but nice day on Friday. So what we need to see, again, this is what we talked about 2 weeks ago. What we need to see on this gap down is for follow through with a gap up tomorrow to feel good about the market as we try to hammer out this bottom. Here's a good example of, again, these October lows have to hold. So that's what we're looking for tomorrow. All these charts, if I go down them, they're all going to look the same. So I'm not going to pull out certain sectors like I normally do. Again, I just want to talk about this morning star pattern, and that's what we need to see tomorrow, is to see for confirmation of that pattern and a gap up tomorrow, and that will hold out that these October lows are starting to hold as a potential bottom. Before we get into our educational portion of our video, I wanted to show you on our blog, Accendo Traders, blog.accendotraders.com. I got a great post on our top 10 indicators I like to use. And when I always say that this is where our final version of our video is, this is where you can see the full version of the video. And of course, we have our 30-day challenge, and we had a great webinar yesterday, so please be sure to check those out also. And now it's time to go to the education portion of our video. We're using the book Trading a Zone by Mark Douglas, Chapter 3, Taking Responsibility. And we're talking about winners, losers, and busters. When we met last Sunday, we talked about one of the areas that traders lose their most money is because they feel like they're unbeatable. It's that when they start winning, they overtrade, they put on too large a position, they violate their rules because they feel like they're on a roll and that they are in the market, they're bigger than the market. And usually what happens is the market gives them a harsh coat of reality, and that emotional pain is usually significant, and this is that boom that they feel. This is the bust that they feel after that boom of feeling like they can't lose. Well, as we all know, we all can lose. Mark goes on to say that he feels like there are 3 types of traders, and this is interesting, and you tell me which one you fit into. The smallest group, he said, is about 10%, and these are the consistent winners. And not only have they learned how to make money, but they're not susceptible to this boom and bust cycle. They're not susceptible to the emotional ups and downs of the market. They trade on rules, and they trade based upon their conditions that they've set up. They have a trade plan. The next group, which is about 34% of active traders, are consistent losers. You know, they mainly have losing trades with an occasional winner, and regardless of how long they've been trading, because some of these people I talked to have been trading for years and have never put together a trade plan. They have never put rules. They jump from guru to guru, from indicator to indicator, and never sit down and learn how to actually trade the market. They learn how to place trades, but they haven't learned how to actually interact with the market. And because of that, that's why it's virtually impossible for them to be winners, because they haven't put together any rules, any trade plans, anything to keep them from making the same mistakes over and over again. Then he goes on to say that the largest group of trader is 40-50% of active traders who go through this boom and bust cycle. They've learned how to make money, but they haven't learned all the trading skills required to keep making money. And so they have a winner, and then they have a loser. They have a winner, and they make money, and then they forget about their rules that actually made money for them, and they just start trading and overtrading, and again, reality sets in, and they lose money. So which one are you? Are you the consistent winner? Are you the consistent loser? Or are you the boom and bust? Make money, lose money, make money, lose money. Again, our whole thing is about trade plans. Our whole thing is about developing systems and removing the emotions from trading and trading based on rules. And this is the thing I've been saying for the past couple of weeks. A good trade is one entered and exited based upon rules and conditions, regardless of the outcome. And you need to be emotionally detached from the outcome. If you lose money, fine. If you make money, fine. And make adjustments to the current market condition. So, to get the full version of our video that has our stock picks for the upcoming week, you have to get our podcast. You can also go to our blog.accendotraders.com, but our blog is the last place that the video gets put up there. Podcast is next, is first, the full version. If you're ready to become a paying subscribe member, this is our weekend one. We put this out for free every Sunday, but we also have a Monday, Tuesday, Wednesday, Thursday one with our trades. And remember, we put out trades that are good for the next day. We're not like other places that put out trades that they're trending. We put out trades day by day, what we think are safe to trade. So again, there's our blog at AccendoTraders.com. And we had a great talk yesterday at our 30-day challenge, AccendoTraders.com 30-day challenge. We had a good review session yesterday talking about moving averages, support and resistance, support Bollinger Bands. We're going to move on to RSI, Stochastic MACD, and ADX, and we're going to get into some chart patterns. So come check out the 30-day challenge blog. Trade at your own risk, and I will see you guys next time.